got an in-principle approval from RBI to become a small finance bank. The final approval, of course, is still awaited. If all goes to plan, they will officially become the first ever payment bank to successfully transition or make this jump. For now, they're going to keep operating exactly as they are today until the final license comes through. Rishi Gupta, the MD and CEO of Fino Payments Bank, joins us now to talk about how life changes. Rishi, congratulations on getting that long-awaited in-principle approval now from the RBI for the small finance bank license. Begin by telling us how life changes in terms of the structural, the capital, the governance changes you have to bring about, specifically with respect to shareholding as well. You of course have Fino Paytech that holds majority stake at the moment, within which the investors may have to look at reducing their stake to comply with RBI norms.
Okay, thank you, Ritu, and thank you to all your viewers. Congratulations on your 26th anniversary as well. And we are grateful to RBI for giving us this opportunity to convert the first payments bank to convert into a small finance bank. So too many questions. Let me just try to broadly cover. So Fino Payments Bank continues to function in the current form till the time we get the license operationalized. We have enough capital to start with, but we will soon see how we want to augment that capital as we move in that direction. From the life point of view, Payments Bank cannot do lending and has limitation on the liability. So both from a liability point of view as well as from the lending point of view, it's a big change for us. We have set up a large distribution and have been very advanced on the technology part. So with the distribution and the technology and the digital mindset which we have, we plan to create a very differentiated small finance bank. A very asset-light small finance bank and a very low fixed cost kind of a model. The way we have built up the payments bank, we are also going to augment our IT as well as our HR resources as we go forward in that direction. But all in all, I would say it's a very, from a payments bank model to an SFB model, our outlook is very bullish, and we are quite positive that the transformation of the company with the kind of benchmarks they have built in the last 7-8 years will really differentiate Fino vis-a-vis the other SFBs in the ecosystem.
All right, Mr. Gupta, we've been having this conversation for the last 2 or 3 years. And the first time this idea was floated, the stock price was closer to where it is right now. And now, because of the fears that the investors are having on near-term selling by the funds or shareholding structure changes, the stock's taken a bigger knock as well, down around 7%. So technically, the investors aren't sitting on any returns, negative returns, if we account for the opportunity cost, etc. as well. So from a larger standpoint, from here on, if you could give us a sense on how business would be shareholder friendly, or will it be, how do you change some of your key matrices from here on, say 1, 2, 3 years from now? What's your target?
So from where we are currently, the lending business obviously will take 12 to 18 months to come as we get into the entire restructuring and everything which we have to do at the holding company level. Capital, as I said, we don't require. From a margin point of view, I think the margin of a lending business and annuity income which will come up will definitely boost the bottom line of Fino to a large extent as we move in the direction of a small finance bank. As I said earlier, we already have the rails on the ground. We have the people at the corporate level. We already have a lot of people on the field. So our cost structures will not drastically change or will get added to a large number when we move from a payments bank to a small finance bank. From an investor point of view, I think a lot of profit booking is happening at this stage because this has been in the offing for the last couple of months. So some profit booking is happening. But from a long-term point of view, I think the build-up to the small finance bank and further as a small finance bank, I think the certainty with regard to the top line and especially on the bottom line will be there. We expect that the bottom line growth will be exponential once we move to a SFB model. See, one of the big differentiator, apart from the fact that we have a distributor-led model, but our cost of fund is also at about 2%. And we have about 2,600 crores of total deposits with us. That is a good starting point. We have a merchant network which we can use for lending purpose. So that starting point which we have both from our liability as well as distribution, I think is the key and will differentiate us vis-a-vis everybody. So from an investor point of view, I think this is a big positive move from the company. And we expect that once the selling pressure is off, we should see some recovery happening. And from a long-term point of view, I think the stock will jump from the point of view that we have building a model which is more stable and more predictable.
Well, Mr. Gupta, given that you've been preparing for this for the last couple of years at least, just give us a sense of what targets you have specifically on lending. How large a book do you think you can build on your existing base, say in the first year of operations? How much of it will be secured versus unsecured? And on liabilities, now that 2 lakh cap goes away, you've already got a 2,600 crore rupee book. How do you plan to grow that, especially with the new branches you'll open?
So two things. One is we are digitally enabled bank, and secondly, we are a liability first. So we expect that the liability growth will be about 4 to 5 times from the current level over the next 4 to 5 years, maybe 3 to 4 years post the operationalization of the license. So we expect a significant growth coming on the liability side. We want to keep our credit deposit ratio around 70 to 75% to start with. And vis-a-vis that, our numbers will be about 70 to 80% of our deposit ratio. So we expect that the journey in the next couple of years will be about 8 to 10,000 crores of lending book and about 14 to 15,000 crores of deposit, maybe 3 to 4 years post our operational license.
All right. Thanks a lot, sir, for joining in. Thank you, Ritu, for taking us through that conversation as well. What we'll do is take a short break, but there seems to be a bit of a pair trade which is going on in the markets right now. Interglobe Aviation, the crisis that there is right now, we've seen the stock being, beaten down almost 6.5% from its peak. Is down over 20% right now. And on the other side, Horma spoke about SpiceJet. Just pull up the intraday chart of that one as well. At some point, if both of them come together, you would see SpiceJet up around 10% as Interglobe is down about 6%, because aviation, obviously, a zero-sum game when it comes to just that day of bookings. Take a short break, come back, more market talk continues. Sunil Singhania, the founder of Abacus Asset Manager, joins us here in the studio.